we spending too much time and focus on AI?
It is insatiable demand, and there's still a shortage. If you don't do it, you become irrelevant. It's the Wild West, and it's a security nightmare, but it is a peek into what is the possible. But you operate in space, it's free energy.
Free, non-intermittent energy.
That's huge.
Multiple breakthrough technologies, all by 2030.
True exponential change on multiple levels.
It turns out that the movies from the 90s weren't that far wrong.
In this episode, I'm delighted to be joined by two distinguished guests as we talk about all things AI and more in technology. Firstly, we have Tony Kim from BlackRock, who runs the global technology team there. And we also have Alex Watkins from Citigroup in the investment banking division, who runs global capital markets technology. So without further ado, maybe we can just jump straight in. Tony, maybe I can give you a couple of rapid fire questions just to get things kicked off. AI is in our lives in many different ways. What's the most useful thing that AI has done for you so far?
I like currently using it to aggregate disparate ideas. So something that might have connectivity. So I ask a deep research question, let's say energy, and then equate that to compute, and then put it in a dimension of time and a timeline. So like multi-variable composition, and then you look at various things that might not be obvious to connect them together.
What's the one thing you think AI might struggle to replace?
Does it have novelty for a new idea, a breakthrough idea? If you imagine if it was the year 1904 and there was AI and it was trained on all the data from until 1904, could that AI have come up with the theory of special relativity in 1905? It's the year 1970 or 76, and Star Wars comes out in 77. Could it have come up with that original screenplay? And these kinds of ideas, or today, can it solve the theory of quantum gravity? That kind of novelty, new breakthrough ideas, I'm not sure that's capable right now, but we'll see in the next few years if it can really bring that novelty of new invention versus task automation and various things, I think, which it can absolutely do.
That breakthrough in originality.
The breakthrough originality, that very, the tip of the spear, if you will, of invention. That's still that human capability.
Maybe just give us a sense of your journey to today. Were you destined to be a technology investor, do you think?
No. I grew up in the Midwest of the United States. I went to engineering. I realized that wasn't really my calling. I wanted something much more strategic, and the investment role kind of married what I think is my core strengths, I guess. But I've always had an interest in technology, maybe because of the engineering, but also serendipity of being in California.
And remind us today what your role is at BlackRock and what you're
sure.
responsible for.
I lead the investments technology side. I invest globally across the entire value chain of technology, which is like now almost half the market cap of the world.
Alex, maybe I could ask you to introduce your role here at Citi and perhaps your journey of late as well.
So I'm global head of the technology capital markets businesses. That's equity, debt, the stuff in between. That's asset level financing, so data centers, contracts, GPUs. So really right place, right time. Tech continues to grow as a proportion of GDP, and the companies are getting significantly more capital intensive. So lots to do.
Tony, if I can sort of turn to you, you've described AI as an intelligence revolution that is arguably the single biggest changer and driver of growth going forward.
I laid out a framework 3 years ago when it first started, and I just follow that framework. To intelligence revolutions, but to manufacture the intelligence, you start at the bottom. And I just call that the entire infrastructure complex. This is also what I call atoms. Atoms versus electrons, okay? And so the very, very base layer is energy or power, is necessity to then run the compute, the chips, and then those chips are then housed in a data center. Those three is the infrastructure. They are 100% linked. It is 100% correlated because you need the power to drive the chips to then give birth to the models. And so that base layer is pulling in the plurality of the current investment. That layer then gives birth to the intelligence layer. This is the model, and I would also put in here like the data fabric. And intelligence is scaling based on the scaling of the compute. And there's also a one-to-one correlation of scaling the compute, scaling the intelligence. Now, at that model layer, but that layer is actually having a big implication at the top layer. The top layer being software and labor services. So a lot of electrons up here. So you got physical system, physical layer of the building of the AI and running the AI, and then the top layer is software is in electrons. The model itself is a bunch of electrons. And then at the very, very top is labor itself. And what you're seeing is now as this intelligence gets more and more capable. The first few years, it's been at least 10x, one order of magnitude capability, 10 times 10 times 10. That's 1,000x. If you keep compounding at that, in 5 years, it's 100,000x, right? So, and that's one question. So then, what if that intelligence capability is compounding at one order of magnitude a year, roughly? What then happens to the application and services layer? That is a basic framework, and then companies are slotted in this framework. The interesting thing is that base foundation layer, most of the market cap and the power, if you will, was never at that layer. It was always at the top. And still probably to this day, the market cap is still in there. But you're seeing a big shift. It's really pushed this shift down to this base layer of intelligence, which is, in my opinion, grabbing value from the application layer and the services into the intelligence. And for the intelligence to basically live, you need this base infrastructure layer.
So there's a real fundamental shift happening.
Absolutely.
In terms of
Absolutely.
how not just investors, but presumably countries as well are thinking about the stack in their country and what they have access to.
Yeah, and that's why you hear sovereign AI and build these data centers everywhere, et cetera, et cetera. The other thing about the intelligence layer, it democratizes this kind of knowledge to all countries, actually. So if you kind of roll this forward, if you have the intelligence of superintelligence or Einsteinian level of intelligence to all people, regardless of your wealth, or there is a democratization happening of that level. And this is why a lot of companies are investing in this base layer, the physical layer.
And given so much is happening and across these layers as you describe them, what's the framework that you have? Is it around strategic moats? Is it the rate of change?
Yeah. So there's another dimension of time. So there's this vertical dimension of this stack, this 3-layer stack, and I think I kind of described it where you're seeing movement amongst the stack, where I think value is initially being accrued. The next is time, because these last 3 years have been about the infrastructure. The next couple of years will still be about infrastructure. And yet, so you need to build this base capability. As this capability is being built, there's then the diffusion of this capability to the average person. There's big lag. What is happening at the state of the art, the capabilities at the state of the art versus what your mother, my cousin, your cousin.
And in the enterprise context as well, we're hearing a lot about that.
Is multiple years behind the capabilities. And so for the first few years, it's all been about the infrastructure. and this will continue.
The build out.
The build out, the build out, the build out, and still more build out.
Hence the debate about CapEx.
Hence the debate. But the thing, yeah, we can talk about that relative to bubbles, but it is insatiable demand, and there's still a shortage. That said, there is a big gap between what is these models are capable of and what you're actually using them for. And so every year, I'm not sure the gap closes, but what was state of the art today in a year becomes average, which gets adopted. And so there's this dimension of like it's lagging the capabilities, but eventually gets diffused, more and more diffusion. And like, I don't know, we're sitting on Monday here over the weekend, this Claude bot, which became Moat bot, which is now OpenClaw, has taken the world by storm, or at least the internet world by storm. And this is kind of like
agents talking to agents, glimpses of the future.
These are glimpses. I mean, it's the Wild West, and it's a security nightmare, but it is a peek into what is the possible, the art of the possible.
And presumably, Alex, you're seeing a whole host of interest from across the whole technology space in terms of funding a lot of these changes that we're seeing in the market.
Yeah, I think it's interesting. I mean, I think if you decompose the market, you've got the Magnificent Seven. They actually have the capacity to fund this and potentially do other things. I think semiconductors, the companies have been generating so much cash. Again, their need for financing is probably lower. Elsewhere in the stack, as I think Tony says, if you look at the folk that are building the infrastructure, the people that are developing the models, I think that's where the capital intensity comes. So yes, probably not going to come universally.
This is fascinating. And maybe, Tony, just that glimpse into the future that you mentioned, it feels like every week, every month, there's some new paradigm that's being hinted at. Is there a historical precedent we could look at going back last 30, 40 years that would give us a parallel as to where we are? Are we in 1972 in the Stanford labs as the internet's being kind of finally brought to commercialization? Is there a comparable moment that helps us understand where we are today, or is it such a unique moment that there is no precedent?
Is it comparable to early internet era? I mean, Netscape browser kind of opens the imagination of what is possible.
Early 90s.
Yeah, another would be iPhone 1.
That moment.
When iPhone 1 came out, remember it was a WAP. Well, before those like WAP browsers on phones, iPhone came out and it was like a flashlight, like a email. Those were kind of the imagination of the possible, and who knew all the applications that came thereafter. Maybe it's not the iPhone flashlight moment, but this lens into the art of the possible with these agents. I think there's an assumption that AI is just like these tools that are wielded by us, versus like, what if they are taking on more and more agency? That's what they call them, agents, right? And they have their own capabilities, and then they take on more tasks, and so then AI becomes more like work or workers.
It's that notion that we should think of agents as fellow employees,
or in Blade Runner,
yes,
replicants,
And presumably the enterprises who many of your investing companies are serving, they're thinking about workflows and how to agentify those workflows. But that's still very early, isn't it?
Still early. I mean, you should ask your audience. How many of you are today, what you're doing, do you have agents working with you or working for you? That simple question. Like, do you have an agent doing certain tasks for you? What is work, right? Work is a series of tasks. If you were to break up all the tasks that make up your job or your work, then you say, how many of those tasks are performed by agents?
Yes.
I would say near zero for most people.
Yes, yeah. That's the fascinating bit, isn't it?
Yeah.
By the way, coming back to Tony's point on the iPhone moment, I think a lot of investors will say to me, there's this debate, are we spending too much time and focus on AI? But if you liken it to the iPhone 1, the point is every minute you spent thinking about something else as a trend at the time, and there was the need to look at a lot of other tech, was potentially a wasted minute. There's going to be so much opportunity coming out of AI, it should be people's dominant focus, and it's why it is the dominant conversation we're having.
When we look back 20 some years at, was it 2007?
Yes.
So yeah, 19 years later. How many mobile operating systems are there in the world? There's 2. And it all collapsed onto those 2 platforms, the iOS and Android platforms. And then where did the value accrue? It accrued to the few that were betting on that. And I think in many respects, that's what will happen here. And if you don't do it, you become irrelevant. So you have to do it. It's existential, in my opinion.
It's fascinating that our colleagues in Citi Research, led by Keith Harry, they've looked at the global labor market, which they've estimated to be a $60 trillion market.
Exactly. That's exactly right.
And what percentage of that could be?
Of which 18 trillion in the US alone, right?
Yeah, I looked at these numbers too. 110 trillion global GDP.
Yes.
Tech, if you add it all up, is 10. 60 plus is labor, and the rest are goods and capital and all these other things. And for the entirety of my career, tech it went from something to 10, it went from 5 to 10 or whatever. But with AI, they're going after the other 100. And that's the prize, right? That is the prize. And then that engenders a whole cascade of conversation. What happens to that part of the economy? Is there an offset when we talk about productivity and these gains? If you look at the composition of GDP in the world through world history, I love history. So you looked at the time of ancient Rome, zero AD. It's probably 95% agriculture. And then the labor was supporting the agriculture industry. By the time of the Industrial Revolution, the 1920s, as opposed to right after the Industrial Revolution, I think labor wages were maybe 25% of the GDP. Agriculture had come way down still. And then today, agriculture is 1 or 2% of GDP. But labor is, like you said, 65% of GDP. But it wasn't always that way. And so then we go look forward into the future with the agents, AIs are capable. What will the new composition be?
And globally, technology has become 20% of the world stock market. It's 35% of the US stock market. If you've got so much more of the world's GDP accessible to tech, the question is, where does that percentage go as well?
And that's always the debate. What is the total addressable market?
Well, I would also say, Alex, it's 35% of tech, but they don't count comm services, which is another 25%.
So where do you define the boundary?
In general, I roughly think it's roughly half of the market cap now. But this goes to this point of it's my own ideas of what is that composition of labor, goods, capital, where the productivity shows up. Is it a net reduction of GDP, or is it? I think many would suggest the abundance theory that it's actually going to kick up GDP growth, but it's going to look different than the current composition.
And that's the key point, isn't it? So we've talked there about the impact potentially to the labour market. Sat here and on Earth, but obviously space is an area where there's a lot of interest, a lot of companies developing new solutions, a lot of governments looking to take control of space. How do you see how AI maybe morphs into that domain and the opportunity set?
I like to deconstruct.
Yes.
That. So what is a data center? A data center is on Earth a building fed with a lot of power. And that power could be from solar, it could be from mostly natural gas, a little bit of nukes, running a bunch of chips.
A mix of energy sources running the chips.
And roughly right now it's 50 billion a gigawatt. 50 billion a gigawatt. The gigawatt's the smallest city. And really the big problem here is the permitting, the land, the supply chain, getting this in, plugging it all in.
No one wants it in their state, their country.
No one wants it in their kids'
Not in my backyard.
I know, your backyard,
NIMBY.
right? So if you move it to space, then what's the difference? Well, the chips are the chips. And that's probably 2/3 of the cost. So the CapEx is not going to be radically different. The big difference is, you got to get it into space. So launch becomes foundation. You must have launch to get the payload, the weight into space. So assuming that companies like SpaceX and others have solved launch, or on the precipice of solving launch at scale, you can get these things into the orbit. And then once in orbit, but let's say roughly, this is my own mental math, the cost of getting a thing in space or building it on Earth, the chips are roughly, it's not like a huge
ballpark
asymmetric advantage. It's then the operating. Well, if you operate a data center on Earth, you're paying lots to and it drives up electricity prices for everybody. But you operate in space, it's free energy. Free energy.
That's huge.
Because a thing called the fusion reactor of the sun.
Free, non-intermittent energy.
And then if you find the sun synchronous orbit and you get 24 hours at the right orbit, it's constant, and it is multiple times more efficient up there than down here. And so then you say, well, okay, free energy, we can run all this compute. It's not next to your house in northern London. It's not bad. So logic and the physics of it suggests that this is possible. Obviously, the key is to get them to space, which goes to launch.
And potentially maintenance in space, right? So, more hostile environment. And I think this is where AI has got a potential, another addressable market, that if space does open up as a sector, who and what will be performing the maintenance and development up in space?
A whole new ecosystem emerges.
Physical AI.
The manifestation of it.
Exactly, yes. Which also has that big impact on the structure of GDP. There is something else I will say that it sounds so negative and draconian. I'm from Korea, and we have the lowest birth rate. My people have the lowest birth rate in the world. Japan, China, Europe.
Those rates have come down.
So there is
even the U.S. ex-immigration, right?
Yeah, declining population, and so you could also make the case that, well, we need the AI to help in the depopulation.
So this is governments thinking long term about population
I don't know if
declines.
governments are thinking about it, but I think this is that is the reality, actually.
And I guess maybe when you talk there about obviously AI as software, but AI as physical hardware as well in terms of the humanoid and robotic revolution. When you're looking at sort of, all the different sectors, companies you can invest in, how much are you looking to find companies that I guess sort of benefit from these joint tailwinds?
Remember that 3-layer stack?
Yes.
What's happening is, and this goes to the question of moats. Moats actually, going back to ancient history, is you hang back in a castle and you defend. So that's where the term moat came in.
Defense.
But actually, really a moat is not about defense. A moat is more about offense, in my opinion. The best defense is offense. Okay, there are lots of companies that are just absolutely vulnerable, and we've seen it the last couple of years. Services-based businesses, heavily labor and software, electrons. The moats that were perceived to have been the moat of tech for my entire career was software was the moat.
Yeah.
Software ate the world. So, that Mark Andreessen
That was the phrase.
Yeah, Mark Andreessen coined it, but no longer, because AI has eaten that moat. It's just eaten it, and so you now question the very moat that has been the mantra of the digital age.
I guess for companies to thrive and survive, we're actually talking about. We're no longer talking about tools. Because I think tools alone won't work. I think you have to talk about the entire task, the entire workflow, the entire activity.
So everything's being reconsidered.
And that goes to this thing of physical. So if the software you thought was all the moat, and the models are getting more and more capable, and for those models to function, you need this compute infrastructure. then where's the moat? Is it in the software itself, or is it's more abstract? Now you need the compute and the intelligence, and then you pack that into a robot. And guess where moats come? There's the other kinds of moats. Well, to build a robot, you need manufacturing, atoms. You need scale. You need metal, and you need to make millions of these things. And like, how many companies can do that? And then you got to finance it all. And so even though this intelligence is, but it's being packed into something like a robot or a car or a rocket. And so the moats get moved. A moat that is just an electron moat, moats based on electrons maybe are gone because the AI can just generate those electrons. But electrons may be packaged with something else like a robot. Maybe that's more of a sense of a moat.
And interestingly, in tech, I think people never used to talk about costs. People used to talk about market position, innovation, these kinds of things as the moat. I think now in certain areas of tech, being the lowest cost marginal producer will be the folk that win. So not universally. So obviously in chip design, that's an innovation-led, scale-led game. But in certain parts of the market infrastructure, it's going to be who can build the lowest cost compute.
So how to create scale whilst consistently innovating as well.
Lowest cost marginal producer.
Tony, you've given us a glimpse of what the future looks like. You also mentioned time as an important factor.
Yes.
Many people haven't seen a humanoid except perhaps on YouTube or some video. When do you think this begins to come into people's visible lives? Or is this something that sort of remains in the markets but doesn't come into people's visible lives for a few years yet?
When they talk about humanoids, if we diverge for a second, everyone's talking about doing the dishes, picking up the groceries, and physical tasks, which of course you have to nail. And that motor function, I think that will be solved by 2030.
Care home assist, yes.
Yeah. It's not so much about the motor function of doing the dishes. I think it's much more about companionship.
The loneliness economy.
The loneliness, yeah. And or working in nursing homes. I think that could be a tremendous application. I could see things like that show up. But I think in general, like robotics, you will start to see that by 2030, you'll start to see some of that.
And you're beginning to see it in restaurants, ramen being served or automated cleaners in airports and the like.
And then space, we'll have that by 2030. I think we'll have quantum computing scaled by 2030. I think we'll see, will we see the first of the SMR, small reactors? I mean, you could see a lot of things, and then, an AGI system. You could see multiple breakthrough technologies all by 2030.
And I guess that's the point, is that it's not one single breakthrough. It feels like we're living in an era of true exponential change on multiple levels.
Levels.
We've talked about AI, but we haven't talked about quantum, we haven't talked about blockchain, but presumably these things come together. Maybe just outside AI, and maybe it's not really outside, maybe it's alongside AI. What particularly excites you? Is it the nascent quantum revolution? Is it the institutionalization of blockchain technologies into digital assets?
I have a lot of my colleagues at our firm is spearheading the tokenization of many of these financial assets,
driven by blockchain.
Yeah, and but I'm much more on the technology side. So I spend a lot of time on the space. I spend a lot of time on the silicon, obviously the AI models and stuff. And you brought up quantum, and I'll say what would represent is my entire career it's been classical computing, and this represents a computer for nature, really. Right, it is something that computes. Nature is quantum mechanical.
It's not zero or ones; it's everything in between.
Yeah, exactly. So it's a way to simulate nature, and a classical computer cannot do that effectively. So the other thing is, like, when you look at the current AGI systems, and this is you throw a lot of data.
Artificial general intelligence.
You throw a lot of data, massive data. And then you get approximations and answers off of that data. It's learning off the data. And this is the digital world. And now it's trying to learn things in the physical world. But it's doing approximations. A quantum computer is more simulating nature itself. It's very little data. It's more the question, like, what is this? How would we simulate this cancer molecule or this new fertilizer? So you ask it this question, but it's exponential compute. A simple, small data, a question to simulate, and then that computer, if it's big enough, can give you an answer.
Because it's got multiple orders of magnitude.
Many orders of problems that no human, no current classical computer could solve if we had a big enough quantum computer. But then the data, imagine now the output of that answer. You then take that these data, and then you can feed it right back into the classical AGI system.
So this is that notion of QAI, quantum AI.
So you have a CPU, a GPU, a QPU, all sitting in one doing all this AGI classical computing, another one that's doing this, what I call exploration of nature itself, getting answers, and then helping train the classical system.
And Tony, do you think we can get to general intelligence, i.e., novelty, purpose, just by throwing more compute at the problem, or do you think there needs to be another fundamental breakthrough?
When you look at what Demis Hassabis says, or what Dario says, and others, there's a difference of opinion of what's necessary and the timeline. So some would say just it's compute, and it's going to happen soon. Others would say, well, you probably need 2 or 3 more breakthroughs, and it might be longer. But like most would say, within 2 to 10 years, either compute alone or compute plus a couple additional breakthroughs. That's kind of the summation of where the views are of the leading AGI labs. And then on top of that, you can throw on this thing of a quantum simulator of nature. And then you add those together, and then you take it to another level.
It turns out that the movies from the 90s weren't that far wrong.
They were pretty good predictives. I guess for a lot of our listeners, yes, whether they're in the corporate sphere, the investor sphere, or others, how to keep on top of all this it feels overwhelming. Do you have any advice for how you think about your frameworks to try and understand what's happening in this space?
What I would do is establish a deconstructionalist mentality, and then create a little framework for each thing. So say these are the 7 things that are very important: space, power, chips, quantum, whatever, labor. Okay, then you say, all right, these are the things that are most important. Create a simple framework for each one of those. Deconstruct those 7 things. And then once you have a framework and a deconstruction, you bring in the data every day into those things.
Through that filter.
And then it gets what? You know what happens? You start organizing yourself. And so then everything, as this information is coming, it's coming into those frameworks. And then you're wiring yourself to reorganize information. So as it all comes in incrementally, it then doesn't become this like gigantic morass of things. It becomes, I understand, this applies here.
Because that's the challenge, isn't it? How to make sense of it all.
So, and then time, you will get more and more comfortable, the lingua franca of each one of these things into your little framework. And then the data just becomes additive. And then, then what you'll do, it's kind of like a neural network being built. As you build that, you then build connections between these 7 things. Oh, wait, that is related to this. This is related to that. Space is related to chips. Chips is related to energy. And the next thing you know, you've connected these things together.
I think AI basically either amplifies or marginalizes your role. So I think you want to be in the camp where AI is amplifying what you're doing. So it's allowing you to synthesize information at a speed and scale that you could never do before. So with that, you have the opportunity to anticipate trends, think more creatively. That's the impetus that it leaves on us in our jobs, right?
And maybe on that point, Alex, when you're speaking and advising founders, CEOs about how they should position themselves for investors, thinking about the AI debate and the lens through which they're looking at companies, do you have any advice that you would share?
I think you're either in two camps. You're either in a part of the value chain where you need to demonstrate why you're going to get to the lowest cost marginal producer. That's sort of part of the AI ecosystem. Or you're in the part where what you're selling is you are innovation-led with a tremendous moat, and a moat that's self-reinforcing as you make further breakthroughs.
And being
on
super
AI.
clear about that.
So I think that it's almost a polarizing spectrum of investment opportunities now, and you need to tell your story along those lines.
And then picking that up, Tony, you mentioned in your early comments about the morphing or the graying of the lines between public and private markets. And obviously, so much of the innovation today is happening in private markets. At some point, some of these companies may come public. How do you, as an investor, and perhaps more broadly, BlackRock as a firm, think about that continuum for companies in their life cycle and how to capture the true gains that sit out there?
Public and private is in some respects, the companies are the companies. What's the difference? Except that one is liquid and non-opaque, and the information is widely disseminated. While the private markets, it's maturity. It's small company, mature company.
Some very mature.
Some very mature company. But it's illiquid, and there's some more obfuscation of information. But at the end of the day, it's a company. And all companies, in my opinion, and it's even more apparent now than ever before, it's a power law. It's a power law game. And it doesn't matter what you're doing. You can be making potato chips or AI foundation models or robots. You are subject to power law. And the competition, the economics, there will be only a few. Isn't that movie Highland? There can only be one. You need it because it is the Cambrian explosion, but only a few things make it. And so there's this vetting that's going on. And so what you see is, you see that vetting in the private market. There are 20 of these companies, and then the two that start to amass critical mass, and everyone's attention is on that. But there's 18 that failed. In the public market, it's the same thing. People say that the number of public companies has reduced.
Yes, there's that statistic. Isn't
Yeah,
there?
and not only has it reduced, the market cap is concentrated. So you have less companies with bigger, it's called power law. And so there are differences, like you say, but my lens is the same. All I do all day long is to adjudicate that decision. Is this a power law winner or a power law loser? Public, private.
So maybe less about public-private and the liquidity debate, and more about ultimately their ability to win.
Yes, you have to win.
So we've covered a lot of ground today, and I feel like we've really kind of brought to light what's happening today. Maybe Tony and then Alex, you could just kind of leave us with a parting thought, which our listeners could think about in terms of what you're excited about looking forward over the next 2 or 3 years. Maybe it's a technology breakthrough, maybe it's something in AGI. What is it you're looking out for that signals that perhaps we're moving to the next step of this AI era?
Next 2 years, I think there'll be many of the same things that just continue. You will be interspersed with these moments of wonder, maybe, like this Moat bot thing
that we just saw. Yes,
But I do think it will also, or robotics breakthrough, self-driving. I think it'll be a series of these things, but the underlying tenor will be performance of capabilities at the frontier keep scaling. The compute keeps being invested. And then a little lens in the future, which it's really just, sucked me in the last 2 years, you can say, is, it's maybe because I'm a sci-fi guy. Will we see the beginning of the space frontier? And a whole new economy that just kind of starts to emerge. So that's what's really interesting, and all of that is wrapped into this rubric that is called AI.
Fascinating, Alex.
I think for me, it would be similar. So space, quantum computing, autonomy, and agency, i.e. complete tasks being performed by AI. And then I think as you think about this year, next year, and the year after in terms of activity, I think we're not only going to break all previous records in terms of activity, I think we're going to see the most variety we've seen. So I think, frankly, that really is the right place, right time.
Well, exciting times. Thank you both, Alex and Tony, for this magisterial survey of what what's happening in this space. Really interesting. And on behalf of all of our listeners, thank you for being with us today.
Thank you, Tony.
Thank you very much.
Thank you.
Thank you.
Two things that really stood out from today's conversation. Tony highlighting the global labour workforce and how that's going to really change the way in which our world looks over the next 5 to 10 years. And then Alex reminding us that companies need to be crystal clear about what their value is in the ecosystem in the AI era. For more on this topic, which is going to dominate, as we know, the next few years, do listen to other Citi Institute podcasts and reports, which you can find online.
Citigroup, Citi, and BlackRock are not affiliated and are independent of each other. BlackRock maintains a client relationship with Citi through Citi Investment Banking. The speaker's views are their own and may not necessarily reflect the views of Citi or any of its affiliates. All opinions are subject to change without notice. Neither the information provided nor any opinion expressed constitutes a solicitation for the purchase or sale of any security. The expressions of opinion are not intended to be a forecast of future events or a guarantee of future results.